Hi, everyone, and welcome to the Friday, April 29th installment of the Silicon Insider, the only uncensored look at life and business in the Valley. My name is Mike Malone, and I'm here with special contributor Scott Budman, technology reporter for NBC Bay Area. Our producer is Jordan Henderson. Our East Coast correspondent is Bob Grove. And our host, as always, is the Silicon Valley Business Journal. Well, quite a week, Scott. And it just picked up steam as the week went on.
It really did. There are some tech trends we could look at, but they almost don't matter because of all the things that are happening with Elon Musk and Twitter. To think that the week started out with that buyout being accepted by the board, it seems like it was weeks ago because in Twitter time it was. But yeah, everything has sort of had this, I don't want to say cloud over it, but just this sheen over it, as in what's going to happen with Twitter, which is how we're spreading all of the other news about earnings and Apple and, everything.
Okay, so let's go back on the Twitter deal. Let's start with Monday. Now, the Twitter board instituted a poison pill to try to stop Elon. Usually that takes a while. And this happened like literally over the weekend. The board decided they couldn't win. Is that what their decision was, that it was just going to lead to a lot of lawsuits and, the shareholders are going to, revolt and all of that? Is that why they decided so quickly?
I guess so. They just thought it wasn't a good deal. Perhaps they saw Wall Street's response, I imagine, because we now know that they heard from a lot of employees, not to mention users, who said this is a really bad direction for the company to go. But then, as you said, things turned around very abruptly on Monday, where the initial offer of $54.20 was accepted by the board. And then they said, okay, now in the next several months, it could take up to 6 months, we'll close this deal. But we are on board as a board, including Jack Dorsey, with the idea of Musk buying the company.
Now, what possessed them to accept Musk's original offer? They didn't even try to come back and say, make it 47, make it 50. Nothing. They just instantly seemed to roll over on this deal.
Yeah, it was a surprise because, like you said, it was a first deal and those are rarely accepted. And I think what had happened, and we had a look at Twitter's earnings later in the week. They really weren't that strong. This is a company that hasn't grown by leaps and bounds. It's still growing in terms of the number of people that are using it, but its ad numbers are really stagnant and have been for a long time. And that's how a social network makes money. There have always been two Twitters. One is the super ultra important global, font of news, but the other is the Wall Street commodity, the money earner. And it just hasn't been, it hasn't been.
They haven't been, they've never taken care of the meat and potato side of their business.
Right.
It's always been shooting after the stars and all that, and not grinding out advertising revenues.
Right. And you're starting to see, we've seen Facebook and, we've seen Google and YouTube and lately we've seen Snapchat's numbers improve. We've seen the huge number of people that go to TikTok, and these are all legitimate competitors, not necessarily in the news game, but in the advertising game. And Twitter really sticks out on that side, what you call the meat and potato side. It sticks out because it's been so slow to somehow monetize the attention that it gets. And, nobody gets attention or monetizes things quite like Elon Musk. And so in some ways, the board might be sort of shrugging its shoulders, throwing up its hands and saying, we've had years to try to do this and we've been unsuccessful. Why not go for yet another celebrity sort of brass ring? Because that's what Twitter does.
So he's going to take it private.
That's his plan. Yes. Everyone gets paid off $54.20 for each share that you vested. The company goes private, and that causes all sorts of different things. You don't have a whole bunch of owners anymore, but also it could make it tough to recruit. As tech companies often recruit not just with salaries, but with the promise of stock options, and Twitter wouldn't have those.
And the top people, it's always about the options. Salaries in this town are never enough.
Right. And even some employees tell me that they make close to, if not half of their income, take-home pay, with those stock options. If those go away, does Twitter then have to raise salaries to be competitive with these other companies many of them smaller, that are offering stock options and sort of that pot of gold at the end of that potential rainbow.
Well, maybe Elon's betting that the Elon Musk penumbra will attract people for a year or two and then take it back out public. He can certainly do that.
We've seen that, right? I mean, Michael Dell weighed in. He's somebody who's, famously been public, private, merged, private, public, and it can all be done in a lifetime in a several business cycles. But right, do people stay if Musk is the owner of the company, given what his performance on Twitter is? And that's a big question too, is does he let certain people back? Does he get certain people kicked off? His whole free speech banner, what does that really mean? And I think we'll find out in the weeks to come.
It's interesting that he keeps talking about transparency. And what does that mean in regards to Twitter? Does that mean he opens up the censorship process and how decisions are made? Does he publicly release the algorithm that decides who gets blocked and who's or suspended and who stays on? I mean, how far does his claims of transparency go?
We don't know. All of those things are possible, by the way. Remember, Tesla, as it was still gearing up, released the patents for much of what it was doing as an EV company. That was a really bold move to say, hey, we're in this to help overall, not just to help our own company. So to somehow release things, I don't know that other social networks are really, drooling over the idea of, hey, how does Twitter do it? Because they're doing well too. In fact, when it comes to sales and advertising revenue, they're doing much better than Twitter is. But the idea that Twitter could be, again, open to perhaps the Donald Trumps or the Babylon Bees or, whatever conservative, an entire industry was formed over the last 5 years by companies doing their own social networks to attract conservatives because they felt they were being blocked or kicked off Twitter. What happens if Twitter becomes more conservative? Do you see that happen on the left, where we start seeing new social media companies saying, hey, come and be progressive?
I think we will. I think we absolutely will. It's interesting, though, that Donald Trump has said, no, I'm not planning on coming back to Twitter. I got my own play box now, Are we going to see that, where these alternative sites just simply hold their ground against Twitter and Elon can't open it all the way up again?
Right. So far, the answer has been no. They haven't held their own. The Getters and stuff like that. Truth Social is, it's the number one app as you and I speak right now in the free downloads in the Apple App Store. What does that mean? I don't know. If Donald Trump doesn't get the attention that he had on Twitter, he'll try to get back on Twitter, especially if he's going to run it for president again. So there are all sorts of ifs, in the future about that. But, I think he's got a financial stake in Truth Social. And so that's what he wants to make work right now. If it doesn't work, where else is he going to get his oxygen?
True. Let's talk about the employees of Twitter. There was a huge outcry that they'd been betrayed. I find that a little bit disturbing because it's like, you mean we can't control the speech that's allowed on our site? We have to give up our ability to censor certain folks. It struck me that was not a positive point of view. You would think, well, we welcome everybody, let's start again. We've gotten off track a little bit. We have half the country furious at us. Let's try Elon, see what happens. But instead, it's like, this guy is the Prince of Darkness. I remember just a few months ago, he was the hero of every Tesla owner. Now he's evil. He's racist because he grew up in South Africa under apartheid. On and on and on. This guy's going to be the devil destroying American. Well, the best phrase, most ironic phrase was, he's going to destroy American democracy by allowing more speech.
Right. I mean,
so what do these employees do? Do they quit? Do they walk away? Has there been a walkout yet?
No, there hasn't been a walkout yet, but the short answer is yes, they leave. I mean, right now we're in a really strong economy. If you're a talented tech worker, you're not putting out a mug and asking for change on the street. You're getting job offers, multiple job offers right now. And many of them are saying, hey, you can even work from home. Airbnb just saying you can work anywhere, won't affect your pay. There is a lot of competition out there for tech workers, and they know it. And so they're able to say, to a certain extent, we want control over this company, just like shareholders might. But here's the rub. If Musk takes over, there aren't going to be any more shareholders, and employees are going to have to be in a company led by Elon Musk. And that has meant two things: financial reward, lots of controversy. Yeah. And sometimes you just don't want to have to be part of that. It'll be interesting to see where it goes, because before Twitter has a chance to grow, it needs to improve its bottom line. And that comes at a price. But there are still so many things that have to happen before Twitter really either grows or shrinks. But in the short term, yeah, I figured there would be employees who are like, oh my gosh, Elon Musk is going to be the one to take this company over, because that is just a loaded dice in Silicon Valley, as it has been for years.
If I was thinking about Twitter employees, or if they were thinking hard, they're kind of on the horns of a dilemma right now. You either get out immediately, because if you look ahead and you look at the economic numbers, the good times look like, we're only one quarter now away from an official recession. And if I was and knowing the history of Silicon Valley, I might be looking for a safe harbor to get through the downtime. People tend to stick around in their jobs in this town when we go into a bust cycle. So if I'm going to leave Twitter, I want to leave now and see if I can find another place where I'm safe as the economy gets bad. The trouble is, I then become the new employee, and first in, first out during the layoffs. So do I stay at Twitter and, bite my tongue and just get through these, the next year or so, or do I get out immediately, see if I can find another job where I can hide out, I can go to ground while the economy goes bad?
I mean, that's a calculus you have to make. If you stick around for maybe 6 months or so till the deal closes, you're getting $54.20 for your shares. Yeah. That's likely for most people a premium, but yeah, I mean, who knows? I think we'll see movement at Twitter, both with some people leaving, but also trying to grow that bottom line in order to grow the company in the future and be more competitive against the Facebooks and the YouTubes and the TikToks.
On the other hand, if I was a Tesla employee, I might be a little upset right now. Elon's now distracted. How much did the stock value drop in a single day this week? It
dropped about $110 billion in a single day.
Yeah. And I'm thinking, wait a minute. He's off to play on another playground, and he's forgetting us at Tesla. I would be very concerned if he's getting stretched way too thin.
Well, and that concern is, I think, why more than anything Tesla shares have had a rough week, but they've also bounced back to an extent. But people are concerned, A, because of what you said, B, because he might be having to, and he sold $8 billion of shares this week in Tesla. He's got to sell some, which puts them back on the market, and that devalues the shares. But again, you can take this in a very hour by hour thing, or play the longer game. And I think Musk is playing a slightly longer game here than most people.
Yes. Okay. I thought the single most disturbing piece of news this week, as a fourth generation newspaper man, was that the Biden administration announced that it is creating the Disinformation Governance Board. And I'm sure this wasn't a coincidence that happened happened this week. And they put a woman named Nina Jankowicz in charge of it. And I've seen some of her tweets. It's hard to believe that she's going to be a truly objective observer of what constitutes disinformation and what doesn't. We've talked about this since we started this podcast, that what is disinformation? Who defines it? Who guards the guardians? We put people in a position where they decide what we're allowed to know. And I find that deeply disturbing. And to have, people have already calling it the Ministry of Truth, like out of 1984. it bothers me that the federal government is now going to intervene, backed up by DHS, the Department of Homeland Security, to decide what is acceptable for us to read and to see. That bothers me a whole lot.
Right. It's a reaction to the plethora of misinformation and disinformation that is out there. Governments, this is not the federal government's first time in this rodeo. You know that.
Oh, no, of course. But the timing, this is the Elon Musk, response by Washington.
Right. But even without Elon Musk, this is a big problem. And, as someone who works for what you'd call mainstream media, it's something that bothers us because there is this view that, oh, we're all controlling things and we're all pumping out just what we want, which is not true at all. But when you're out there trying to tell the story, there are people who see what they want to see and who put out what they want to put out on places like social media. And to me, as a journalist, as a lover of information, I say bring it all. But I spend a lot of time going through this stuff and weeding out the misinformation from the real information. It's what I do for a living. It's what I would do even if I didn't have this job. I'm a news hound, but not everybody does. And I talk to plenty of really intelligent, thoughtful people who say things that are absolutely outrageously untrue because they read it somewhere. Because in this democratized world, there are plenty of places to get your information. So it's important to gatekeep to an extent. But you're right. The threat of social media companies is they're controlled by a small number of billionaires, and that's controlling what information we get. Same with the media. We need to be diverse. We need to be out there all over the place, both in our ownership and our foot soldiers, in order to give you a wide range of truth. And that's difficult. Trust me, I've been doing it for years.
It's tough, but that's why they pay us the big money, right? I mean, that's
exactly.
Our job is to go out there and counter false information, discover falsehood, try to uncover the truth. And when you have we have such enormous counterexamples of what happens when you decide what the truth is without digging into it. I mean, you're a newspaper, you're a TV reporter. I was a newspaper man for many years. I'm the great grandson of a newspaper man. Bottom line, it seems to me the ultimate example is Hunter Biden's laptop. This is like the greatest story I ever saw. It's got hookers, it's got drugs, it's got illegal guns, it's got Russian plutocrats, it's got the Chinese, it's got corruption. Nobody covered it. I was just gnawing my fingernails off as this thing started to emerge, thinking, why isn't this thing out there? And instead, we report that 47 national security, specialists say that it's misinformation. Well, there's a case where something actually turned out to be true and it got labeled misinformation and we weren't allowed to know about it. That strikes me as the ultimate reason why, the proof that we've got to get things out into the public sphere and argue them out there. And for people like us to dig in and find out what the real story is and present it in a way that people trust us.
Yeah, but that's an example. And I hear lots of examples of things that the public has never been able to see that we've been seeing every day for years. So, I mean, you can tell me it's a cover up, but I've read about that story for years in all sorts of different media. But
the fact that I had to go to lesser niche media rather than the primary conduits of news to the American public was shocking.
Perhaps so. But look, this is what we're going to be talking about for a while, because a billionaire who is talking about free speech is about to own the way that we get news. That's going to define a lot of what we talk about and what we see and perhaps what we don't see over the next several years if this deal goes through. I think it's of enormous importance, not just for Twitter's advertising or shareholders, but how we get and consume news. And that's why I'm going to be watching this, tick by tick.
Yeah, no, it's disturbing. I mean, we have slowly watched billionaires and, you and I both know a lot of billionaires, but is their judgment better on matters of news than the guy that just pumped your gas? Probably not. And being a billionaire distorts you as a human being. I mean, even they will admit that. And yet we are slowly allowing all of our major news organs. You got Bezos at the Post. I mean, we now have, Elon at Twitter, Carlos Slim at the Times. I mean, we basically have oligarchs running all the sources of information in this country right now, and that's a
Yeah,
disturbing
well,
trend.
we made them public companies. We gave them quarterly earning reports. We told them you have to meet these fiscal bottom lines. Your great grandfather probably didn't have to deal with that quite as much. And so they were able to focus on the news instead of having entire rooms of that newsroom focused on finance and how do we
Yes.
make rent? How do we make payroll? And when you say not only do you have to do that, but you have to please investors, then you turn to the billionaires. And that's where we are. It's unfortunate. And no, it doesn't make us any better at what we do, but it pays the bills.
Okay, so let's talk about the consequences of all that. Well, we have one more news item that had a profound effect on the markets. This was earnings week, right? I mean,
Right.
yeah. Uh, the U.S. economy retracted in the first quarter. Now, we haven't seen that in a long time. That's scary. It's, we've been talking about inflation, stagflation, recession. Boy, it looks like with high inflation and inflation getting worse and the economy slowing down fast, we're heading into a Carter era stagflation. And
We
that's
could be,
very concerning.
right. I mean, for a while, we've had an interesting case of wages going up, spending going up, and yet the specter of inflation. And inflation started to creep higher than the wage increase. And we saw that at the grocery store. We saw that with the price of gas, certainly housing in the Bay Area. Now we're starting to see the economy slow down, but inflation is still there. And that's, I believe, how you get stagflation, rising prices, but a slow economy. And the interesting thing about that is the employment numbers are still strong. We're
Right.
still getting paid a little more, again, less than the cost of inflation. So that's bad. But when does that stagflation hit? Because it hasn't yet hit jobs. But if it hits companies and corporations, which it always does, they cut back on those things. And that's my fear. Jobs are always my bottom line. And if fewer people are working and we still see prices going up at the pump and in the grocery store, et cetera, that's when the economy really struggles. And that's when we all pull back on our purchasing.
And I was kind of deluded by watching the market early in the week as it climbed. And I was trying to figure out, especially when we had the bad economic numbers, the market still did good. And Grove dropped me a note. And he said, the rumor is that the market was thinking that the bad economic news would force the administration to back off on some of the spending, and it would force the Fed to ease off on this ratcheting upwards in interest rates. And when the Fed didn't respond to it, the market started crashing like it's doing today.
I mean, yeah, the Fed has said it's going to raise interest rates, right? And that hurts the stock market, at least in the short term. I mean,
right.
Again, we should be playing the long game here instead of worrying about Fed comments, but I get it. People do worry about those things. And I just wonder, because you said even, the Reagan era, the inflation rates, or excuse me, interest rates went up to fight inflation. That led to recession. Right now, the one thing that we're seeing that we haven't seen in a while when it comes to Bay Area and the housing market is rates are starting to go up. That makes the prices stay high because we're seeing fewer sales. And so there's this sort of limbo of, wait a minute, pandemic is, in a slightly better place. We were supposed to see more houses come on the market, more housing for people, lower prices, but we're not seeing that now because on top of everything else, interest rates are higher. So mortgage rates are higher, not what our parents paid back in the day, but they're topping 5%, which we haven't seen in a bit. So all these things are coming together. And he's right. There's a time when it's going to, I think, I'm not sure if paralyze the economy is the right word, but people are just going to have to pause and say, wait a minute, for me to afford that, and that, I can't do or buy this.
Yeah, I'm not buying a car this year. We'll
Right.
drive the junker a few more years. Oh yeah, and the scary thing is you can't grow your way out of stagflation. You literally have to pull the string and crash the economy and start up from the rubble. And that's we don't want to get into that situation. I mean, it's ugly and it does a lot of damage.
Right. Keep an eye on the tech companies because
Okay, well,
a lot of people,
let's take a look at the tech companies. You covered them all this week, right? I
I'm
mean,
saying for jobs, because
yeah.
yeah, if
Oh
they
yeah.
start to cut, given what you and Grove say, how do people pay their astronomical mortgages around here? Not to mention the price of gas now that they're commuting back to work. Things could get ugly in a hurry if jobs start taking a hit.
Yeah, well, I wondered about that. I'm still looking at the real estate prices. I get all the real estate flyers. My neighborhood in Sunnyvale, the houses are now going for they're pushing 2.5 million, $3 million. People buying houses now are paying incredible mortgage payments. And how are you going to keep that up if you're laid off for 6 months, or the economy gets worse and worse? I mean, it could be a real problem because these numbers are crazy bubbles right now.
Right. I would say, stay tuned. We have a few minutes today left, but in the weeks to come, we're really going to be watching these numbers and
Yes.
looking for layoffs. We've started to see a little bit. We've seen companies say, hey, the Russian situation is hurting. The job situation is in peril because of inflation, not to mention the pandemic and, all that. Pay attention to the jobs and these tech companies, because if we see layoffs, a lot of dominoes fall.
Absolutely. Okay, so let's look at some of the companies that reported this week. Facebook up. They had a good quarter.
They had a decent quarter and they had shed so much in their stock value that people were just breathing a sigh of relief. We're still here. We're still growing a little bit. We still have Instagram. We can buy the stock again. And so it shot up after, but it lost more than half its value in a
Sure.
pretty short period of time. That's $500 billion, by the way, of lost investor value.
Alphabet shares closed down 3.7% after falling 3.6% the day before. Bad numbers.
YouTube. Yeah, tough time for social media because we're getting outside. Young people are going to the movies, et cetera, et cetera. YouTube took a hit. And again, Alphabet stock has been outstanding largely during the pandemic. We're starting to see a lot of big tech giving some of that back now.
Well, the big loss, I think, was in YouTube, wasn't it?
Exactly.
Yeah, because TikTok
Yeah.
is doing its damage to YouTube now. Okay, so bad first quarter. They're not predicting a great second quarter either, are they?
No, a lot of these companies are saying there's now uncertainty because things are loosening up in terms of the stay-at-home edict. So if you're a software company or a networking company, a social network especially, are you going to be that important to our lives? Because maybe we'll actually get out to see people again and see movies again. I mean, look at Netflix, and a lot of these companies that are just getting pounded because people don't need them quite as much.
Well, look ahead a little bit. If the numbers continue bad, the end of the pandemic and the lockdown makes a nice cover for bad economic news in other ways, right? Yeah, people aren't using Google as much, not using YouTube as much, but oh yeah, TikTok is kicking our ass over here. But we'll
Yeah,
just
but
talk,
also look,
we'll just talk
the
about the
biggest,
economy.
but we're global. And by the way, the biggest European country we pulled out of. Oh, and the second biggest European country, they're under attack. They're not Googling all that much these days either. So this is a big loss in the European market right now, not to mention everything that's coming up with the loosening of the pandemic edicts.
Okay, nobody got hurt as much as Amazon. Amazon's still getting hurt even as we speak. Uh, Grove just sent me, as I was connecting with you, Amazon shares have dipped as much as 12% so far today. They are getting hammered. But they came out with what was the worst day since January 2014 that the company had. And they're saying that not only did revenues slip, but they're expecting it to continue down. And they had to take that big 125. Well, what's the name of their electronic car company that failed?
Yeah, well, they were big investors in Rivian, and they
Yes.
took a hit when Rivian stock fell. So did Ford. There were a few companies out there that
Right.
put a lot of money into Rivian. Rivian is slow to get off the ground, like most EV companies that we know of and speak of. And those companies, they invested high. And remember when Rivian went public, it was a superstar, and it's really come crashing down. And it's taken a lot of these companies' investments with them.
And I also notice on these analyst calls, they blame something that everybody already knows and they can write it all. They've already written it off. So it's actually a past problem. But everybody's looking at Amazon and going, yeah, maybe they got labor problems. They got all sorts of things going on. The market's backing off in a big way. And
yeah, they're still going to be fine. We're still going to shop on Amazon. We're going to use Amazon Prime, et cetera. But there are union issues. And yeah, I mean, that's a company to watch because remember, they were built to not have a union, and then they blew it and they didn't take care of their employees. And now the union is, being voted in. And we don't really know what that means at a tech company yet, but I think we will soon.
Okay, so Apple's numbers, let's get through this real quick before we run out of time. Apple's numbers are good, but their stock fell a little bit because there's expectation of some trouble in the future quarters. Intel beat the top and bottom lines, but forecast, weak forecast into the future. And Robinhood is announcing it's laying off 9% of its employees, and they really got hammered. So
it's going to be a long time before someone uses Robinhood in the same sentence with Intel and Apple. It's a pretender still. Meme stocks will only take you so far.
So much for the flavor of the week 7 months ago. Okay.
Right. And I feel bad for those employees, but they grew way too fast for a company that just isn't necessary yet. And
finally, we'll talk about Eric Schmidt and Web3 now. Web3, have you heard about this? Yeah, sure. We'll see. But one last thing, the Blockchain Association. Did you read that? They want the federal government to lay off Russian oligarchs because that's a primary source of their business, and they've hired lobbyists. That's not a good look. I mean, blockchain always has looked a little bit sketchy, and now they're coming out for Russian oligarchs. So
usually you do that quietly. And
yeah, I'm sure their lobbyists have found dark restaurants in order to meet with legislators to talk about that one.
Right.
Okay, everybody, that's it for the week. A crazy week. Let's hope next week is it's good for us, but not necessarily for everybody else. That's it for now, folks. You can find us on the Silicon Valley Business Journal homepage, as well as on Spotify, Anchor, Google Podcasts, Apple Podcasts, LinkedIn, and very much check out our new YouTube channel. It's a lot of fun. Have a great weekend. We'll see you next week. Bye-bye.